Hello everyone. Welcome back. Today, we've got some crucial news you don't want to miss. Let's dive right into the top financial headlines and break down what's happening. Today, 3 major updates caught my attention. 1. US consumer confidence takes an unexpected hit. Bloomberg reported today that US consumer confidence has taken an unexpected drop, primarily due to the ongoing pressure of high living costs. According to data from the University of Michigan, their confidence index fell to 68.9 in early October, down from 70.1 in September. Economists were expecting a median score of 71, so this drop took many by surprise. What's driving this decline? Well, even though inflation has cooled off somewhat over the last year, households are still feeling the pinch of higher prices. The survey revealed that consumers now expect prices to increase by 2.9% over the next year, up from 2.7% last month, marking the first rise in inflation expectations in 5 months. Meanwhile, long-term inflation expectations over the next 5 to 10 years dipped slightly to 3%. The bottom line is that many people believe the cost of goods is rising faster than their income, which is hitting their confidence in the economy. Though this isn't a headline-grabbing piece of data, it's getting a lot of attention on Wall Street because it adds another layer to the debate about whether the Federal Reserve will ease up on interest rates. This slight dip in confidence could have a subtle, but important, influence on those decisions. 2. JPMorgan's big earnings report shakes up Wall Street. The earnings season for US companies has kicked off, with the big banks leading the charge. JPMorgan's third-quarter earnings report, in particular, has grabbed everyone's attention. While different media outlets have had different takes on the report, there's no denying it had a big impact on the market today. Reuters reported that JPMorgan exceeded expectations and raised its key earnings forecasts. CEO Jamie Dimon also highlighted how geopolitical risks are becoming more serious, noting a 31% jump in investment banking fees. Despite these risks, the bank's earnings came in above what analysts were expecting, which led to a surge in its stock and other bank stocks as well. Meanwhile, the Wall Street Journal had a different spin on the report, focusing on Dimon's key statement that the US economy has officially achieved a soft landing. This is a huge shift because Dimon has spent the last year warning about a possible recession. Now, he's confident that the worst is behind us, and no major media outlets seem to be pushing back against that. If this soft landing narrative sticks, it could signal a new phase for how investors approach the market. The report also touched on how despite the Fed's recent interest rate cuts, JPMorgan's loan income continues to outperform expectations. They even raised their full-year profit forecast. According to the bank's CFO, Jeremy Barnum, the current conditions align with a soft landing, as businesses remain optimistic and consumers are still spending. In short, JPMorgan's results suggest that the US economy is doing better than expected, and this could shift the market's expectations going forward. 3. Tesla's robotaxi unveiling disappoints investors. Tesla held a much-anticipated event last night where it revealed its new robotaxi and humanoid robots, but the reaction from investors wasn't exactly what Elon Musk might have hoped for. Despite the excitement surrounding the event, Tesla's stock dropped by 8%, wiping out over $50 billion in market value. The Wall Street Journal reported that while the event had plenty of flashy moments, investors were left disappointed by the lack of solid financial details. The company showcased a new 2-seater vehicle called the Cybercab, which has no steering wheel or pedals, and Musk arrived at the event in an autonomous vehicle. He also demonstrated a larger, autonomous shuttle called the Robovan that can carry up to 20 people, as well as Tesla's humanoid robots, which even mingled with guests. However, despite all the spectacle, there wasn't enough substance for investors. What they wanted were details, production timelines, financial projections, anything that could offer reassurance about how Tesla's grand vision would become a reality. But Musk didn't provide that. Even though he described new technologies like inductive charging, which allows cars to charge just by driving over a charging pad, the lack of concrete updates left many skeptical. Analysts, including Tom Narayan from RBC, commented that while the event was great for showcasing Tesla's long-term vision, it lacked the key metrics that investors are looking for. As a result, Tesla's stock tanked. Musk's ambitious plans will need to show real progress if he's going to win back the confidence of the market. Here's the second big story I want to share today, and it's about the latest updates on the US Senate race for the upcoming elections. 1. Recap on the House race predictions. Yesterday, we talked about the report from The Economist on the US House of Representatives election. Their analysis showed that Democrats have a better chance of keeping control of the House than Republicans. In short, they're predicting the Democrats are likely to win a majority. 2. Latest Senate race predictions. Today, The Economist released their take on the Senate race, and the headline was "The Democrats will struggle to retain the Senate." From the title alone, you can see that Democrats are in for a tough fight and might even lose the slim majority they currently hold. According to their analysis, Republicans have a 2/3 chance of winning control of the Senate, while Democrats only have about a 1/3 shot at keeping it. Basically, the odds are leaning toward the Republicans taking over the Senate after November's election. 3. How they made the predictions. The Economist used a similar method to predict the Senate outcome as they did with the House. They pulled together national polling data, voting history, and other key factors, running over 10,000 simulations to figure out the most likely outcome. Their model assumes that all the independents, including Nebraska's Dan Osborne, will side with the Democrats if it comes down to a 50-50 split. If that happens, Vice President Harris would cast the deciding vote. 4. Key states to watch. Out of the 100 Senate seats, only 1/3 are up for election this year. Of those, 23 are currently held by Democrats or independents who typically vote with them, while Republicans only have to defend 11 seats. That means Democrats are at a disadvantage right from the start. They have to defend way more seats. If Democrats want to keep their majority, they'll not only have to hang on to the swing states, but also defend seats in Republican-leaning states like Ohio and Montana. Independent candidate Dan Osborne could surprise everyone by winning a seat in Nebraska, which would be a pretty big upset. Overall, The Economist thinks Republicans have the upper hand in the Senate race. Tomorrow, we'll dive into how the presidential race between Trump and Harris is shaping up. At last, here's the third big news story I want to share today. It's a significant report from The Economist about Israel's potential options for attacking Iran. The article's title is "Israel Has These 4 Options for Attacking Iran," with a subtitle that says Israeli politicians and some generals are gung-ho that the moment has come. Israel has vowed to retaliate against Iran, though they're somewhat restrained by the US. The Economist breaks down how Israel might respond and the different ways they could strike. Why is this so important? Because if Israel decides to attack, the global geopolitical landscape and international markets could be impacted. Big conflict, big consequences, smaller conflict, smaller consequences. The Economist kicks things off with an interesting bit of history. It mentions that at least twice, in 2010 and 2011, Netanyahu pledged to attack Iran. But in both instances, Israel didn't go through with it. Why not? Well, it turns out that despite Netanyahu's public declarations, the Israeli military refused to carry out his orders. The military rejected his command, arguing that only the full cabinet had the authority to declare war, and since Netanyahu hadn't gotten collective approval, they couldn't act. So, both in 2010 and 2011, the attacks didn't happen because the process wasn't followed. The Economist uses this to highlight that even now, there's always a chance Israel might back out. Fast forward to today, The Economist says Israel is once again on the brink of attacking Iran. But this time, things are different. Netanyahu is expected to get full backing from his cabinet, and in fact, some members are even more eager to strike than he is. So, the question of whether the military will refuse the orders again? Unlikely this time. The government and military leadership are mostly aligned, and they believe this is the right moment to act. One of the key factors pushing Israel towards action is that on October 1st, Iran fired 181 ballistic missiles at Israel. This has left Israeli leaders feeling they have no choice but to respond. The nature of the retaliation will have major implications for the Middle East and beyond. The Economist lays out 4 possible options for Israel's retaliation. Option 1. Target Iran's nuclear facilities. The first and most obvious option, and one Netanyahu has long favored, is to bomb Iran's uranium enrichment sites and other key research locations related to their nuclear program. These sites are scattered across Iran, buried deep underground, and heavily guarded. To hit these targets, Israel would have to send dozens of planes 1,200 kilometers into Iranian territory and use specialized bunker-busting bombs. Even if they manage to pull this off, The Economist notes that the damage would probably only delay Iran's nuclear ambitions by a few months, not stop them entirely. This is Netanyahu's top choice, but it's also something the US strongly opposes. Option 2. Hit Iran's oil ports. A second option would be to go after easier targets like Iran's main oil ports. These are crucial for Iran's economy, providing most of their foreign income. Israeli strategists think hitting these ports would deliver a massive blow to Iran's already shaky economy and might even spark more unrest inside the country. Some even hope it could lead to regime change. This is the most cost-effective option, but again, the US isn't too keen on this because it could cause global oil prices to skyrocket and hurt the world economy. Still, if Israel decides this is the best path, there may not be much the US can do to stop them. Option 3. Assassinate Iran's leaders. A third option would be to target Iran's top leaders in a decapitation strike, similar to how Israel has dealt with leaders of Hezbollah and Hamas. But this one's tricky. If Israel signals an attack is imminent, it's likely that Iran's leadership will retreat to secret, heavily protected locations, making it tough to pull off. Plus, the long-term impact of such a strike is unclear. If Iran's current supreme leader, Ayatollah Khamenei, were taken out, who would replace him? That's already a big topic of debate in Iran. Option 4. Strike Iran's missile bases. The final option is a straightforward tit-for-tat response. Israel could target Iran's missile bases. Since Iran fired missiles at Israeli military sites on October 1st, this would be the most direct retaliation. The Economist suggests that this option would probably be the safest for Israel, as it's the least likely to provoke a massive Iranian counterstrike. In fact, it's seen as the least risky option for avoiding escalation. The Economist points out that while the fourth option, hitting missile bases, is the most likely to keep things from spiraling out of control, Netanyahu has bigger ambitions. He sees this as a historic opportunity to reshape the region. Some of his generals agree with him, especially since Israel weathered the recent missile attacks from Iran with minimal casualties and damage. Netanyahu's thinking is that Israel can push the boundaries without fear of a significant Iranian response. So, while The Economist lays out four possible paths for Israel, Netanyahu may be aiming for a much bolder move, potentially targeting Iran's nuclear facilities. The next week could be a crucial window for Israel's decision-making. Let's see if they follow The Economist's advice or chart their own course. That's all for today. Thanks so much for watching. If you found this video helpful, don't forget to hit the like button and subscribe for more updates. I look forward to seeing you in the next one.